India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome. You are with us on Bazaar Morning Call and we're coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Friday morning. We've made it through another week, almost made it through another week. I'm Surbhi Upadhyay and with me as always Nigel D'Souza. And today we have Rima to get the weekend vibe going. Good morning, guys.
Good morning. Happy Friday to all of you. And it's been a good week for the markets. So today could be a bit of a downer given the way global cues have stacked out.
We're not too far away from those all-time highs. So let's see if the bulls can do their thing.
And who would have thought, right? When we started off August, people were a little bit nervous. But now, all-time highs, we're even talking about that. So that's tell you the kind of pullback that we're seeing. But
you know, I was just checking. At the beginning of August was the time when we had that manic Monday. The Dow fell 1,000.
5th of August, yes.
Yeah, and you know, before that, the Japanese carry trade unwinding. Then that reliable recession indicator, SAM, got tested. By the way, guys, US markets are positive now. The Nasdaq is up 0.1% for this month, and the Dow is only down about 0.2%. All is forgotten and all is well so far.
Well, let's hope so. Fingers crossed, right? Because we had a bit of a flutter on Wall Street last night. Suddenly, we had a sell down going both on bonds and on stocks, actually. In fact, the fall was about 1% or so, between 1% and almost going up to 1.5%, 1.7% on the Nasdaq. So the overnight action was a bit on the edge. And like I said, this played out even in the bond market where yields shot up. The 10-year yield was up almost 9 basis points, likewise for the 2-year. So bit of a flutter. And of course, today is that big Friday. It is all about Jackson Hole. The symposium is underway, and today Fed Chair Jerome Powell is going to be speaking. This is basically around 7:30 our time. And markets are eyeing this event with a lot of anticipation. So what's the expectation? Because now we have not just Fed expectations, we have Jackson Hole expectations. The expectation is that the Fed chief is going to guide for the beginning of the rate cut cycle, but no one's obviously expecting him to exactly guide the market with respect to timing or the quantum of those rate cuts. I mean, if you talk quantum, then if you go by the latest, Fed Watch, the CME tool, then the expectation is that middle of September, when we get the Fed meeting, we'll see a 25 basis points. That's where the majority of the respondents are veering. It is a very small minority, less than a third, is expecting a 50 basis points rate cut. But in any case, so what caused this flutter yesterday? Well, you can pinpoint the jobless claims data, which wasn't too bad, but it did show up an increase in the jobless claims number. So the number went up by about 4,000 over the previous week, and that led to a bit of a reaction. Basically, it's still telling us that the job market is not doing too well. Remember the downward revision on the full year number that we had yesterday. So that was the big one, and then you're still seeing that jobless claims number come in on the lower side. So therefore, the Dow, the S&P, and of course the Nasdaq, all of them down, yields down, like I mentioned. This morning, I mean, Japanese markets are picking off Japanese and Asian markets are picking off on some of that caution. In terms of data, we've got inflation numbers out of Japan. The core numbers, the headline number is fine. It hasn't changed. But core inflation is showing a bit of a decline. So the Bank of Japan should like that. And maybe it gives them more reason to stay on hold and not even think of hiking. Not that they can think of it, I think, after the global market turmoil. But that's the overall global picture. A little cautious is what we've got. Back home, just to quickly talk about the flows. Yesterday, the FIIs were on the buy side. We're talking a net inflow of just under 1,400 crores. Domestic institutions were buyers to the extent of almost 3,000 crores. But the caveat in these numbers is obviously the amount of blocks that are happening, large blocks, right? So the data tends to be a little skewed. In fact, blocks will continue to be in focus today as well. We'll watch out for big ones. Expectations are that Nikkei and Ambuja could see a lot of action. So let's see how that goes. Before I hand over to Rima, I'm going to watch out for this online gaming space, some of these listed stocks, because yesterday we had commentary from the Bihar Deputy Chief Minister, who is the convener of the GST group of ministers on rate rationalization. Remember all the buzz around how online gaming and maybe casinos as well, they deserve to get sort of, a bit of a relief on the GST front. So he acknowledged that, yes, there are representations that have been received, both on insurance. There's a huge representation on life insurance and health insurance, and the GST rate should be far, far lower because these are essential services in some sense. So he acknowledged that, yes, we've received these representations. We're looking at it. The council will come back with its view. So let's see, maybe some sort of a trading punt perhaps on the insurers as well as stocks like maybe Nazara and who knows, maybe Delta as well.
Okay, let's put on some more internals on the table. Well, markets have been making higher highs and higher lows now for the last couple of days. So even as the up move continues, it's good to note that the indices, the Nifty particularly, that data will come up for you on your screen, has been making higher highs and higher lows. But yesterday, the range on the Nifty was just about 83 odd points. And this is the narrowest daily range that we've seen in the last 2 months. For our own markets, the up move has continued for the 6th day in a row, but will be run into profit booking today, given the global setup. That said, week to date, the Nifty is up 2.1%. The Nifty is up 1.1%. The mid-cap index is up 2.1%. And the small-cap index is up 3.5%. And the point about flows, yesterday's buy figure by the FIs was only the 4th instance of the FIs buying in the cash market in the month of August so far. And month to date, the FIs have sold about 32,500 crore in the cash market, while the DIs has pumped in more than 44,000 crore rupees. But Nigel, so far that buy on dips is approached, but today it's going to be tested because the global setup has been weak.
Well, that's right, Rima. You know, the buy on dips thesis, that's going to be tested in today's trading session, and that's because of a couple of factors. Overnight, the global cues weren't very, very good. You had the yields that spiked up, the jobs report as well that did come out of the United States. The economic data not looking too good, so that's why the global markets were in a bit of a dizzy. And also the central bank action is going to be crucial. We'll have, the Fed chair that will be talking later today, and you'll have comments coming in from the Bank of Japan as well. So both those two central bank action will be top of mind. What about the FIs? Well, yesterday they added some long positions. They covered some shorts. Not too much movement. 52% of the positioning is on the long side. What about the clients as well as FIs? Both of them are net long on index futures, but they're aggressively net long on stock futures. Yesterday, there was some mild addition with the FIs. Well, that moved up by around 6,000-7,000 contracts odd, while the client positioning as well came down a little bit. But both of them net long, not aggressively net long, but we like that. So let's move to the next part of the data then. The Nifty PCR. It's moving to the upper end of the range. Normally, the range is 0.7 on the downside, on the upside, 1.5, 1.55 odd has been that. So we're closer to the upper end of the range. And sometimes this tells you that, in fact, that put writing is getting very, very easy because the PCR has moved up. So let's pull up a couple of strikes then. In yesterday's trading session, the 24,800 call, fairly active. 24,500 put, fairly active in trade as well. So just punching in these numbers and going by the premium, we get a broad range out there. On the upside, closer to around 25,000, expecting some resistance. Yesterday, we started gap up, but we couldn't end at those highs. So that's the crucial resistance zone. While on the downside, going by the options data, and the 20 DMA as well comes in, added on the 24,500 mark. That's going to be an important mark that we'll have to track. The Nifty Bank, that's crucial. Yesterday, it made a dash towards the 50 DMA. It couldn't conquer that, however. So it's currently holding above the 20 DMA, but it needs to get closer to around that 50 DMA to help this market trend higher. So the Nifty Bank is going to be the important one. It's showing signs of strength, but it needs to get past that 51,350 odd mark. Stocks that I'm tracking today, well, one of them, Ambuja Cements, because the market had a bit of a sense of this. We as well quizzed the CFO of the company, whether or not the Adani Group will look to pull down some stake or, trim their stake in the company. Well, so the street is positioned for this event where the promoter group is looking to sell roughly on 2.8% at a 5% discount. So post this block will be interesting to see because there's big appetite for Ambuja Cements and large cap cement on the whole. And there are shots in the system as well. So we'll have to see how the stock reacts post that large trade that does take place.
Okay, thank you very much for that.